Hello and welcome again in the next episode of Stocks Advisor channel. Today we will talk about Splunk Incorporated, traded at Nasdaq, ticker name SPLK. Well, Splunk today finished with a dark candle, meaning that it was overall actually starting higher but then descending and finishing lower than previous actually opening. So what do we see here? It looks like a breakage of the wave. Now we'll talk what does it mean of the step actually. So we might go a little bit lower, but overall there are clear indications that we will have soon a very interesting buy opportunities here. So we see that after hours we are trading at 134 without major change, and during the day it was almost negligible, again 134. So no change, mainly with small doji kind of formation. And also you can see that from already from October period we are declining here, and there were two lines of decline. So this was the first one formed already when we started this new wave from mid of October to December, and then let's say the sharper one started by December, and you can see here it's slightly faster. And now, of course, this line, it works not only as a resist level, of course, but also it works as a strong attractor. So let's call it R1. It works both as a resist as an attractor. What does it mean? It means when price is close to it, it works as a resist, but when price is lower than it, much lower, it works as an attractor. And you see these examples many times happening. Like in February, it worked as an attractor. You see by mid of April, it worked as an attractor. So now we're again lower, and the upwards pressure is increasing. But also what we need to keep in mind, and that's why I look at the, let's say, demagnification, you see that there is a principal depth that was happening by April of this year. Of course, it was also a global one, but we still need to keep it in mind that this is possible to go those levels all the way up to 100, a little bit lower. And in general, we just need to mitigate risk, speaking of those. And for the moment, what we can see that it seems like there is, the supportive formation happening, but we are a long time sitting on it already. This is the line of 131.36, and when it was two times working as a double support, it was quite positive, let's say, momentum. When it happened by March here, let's magnify it back to see. When it happened by March, and then when it happened also, you can see again by end of March, but now we are close to it again, and usually third time these kind of patterns are not holding. So what might be happening, we might have a breakdown, and this means that the pattern will be something like we go like this, then a little bit we do recover, and then we do breakdown. So this could be something like this happening, and if this is indeed happening, we need to be prepared to buy at the lower levels. Therefore, again, let's look at different magnification. So how to buy here? Of course, you can see there are levels formed where we could start entering, and actually then the first level would be just here and there. So these are between 123, let's write only dollars since it does not matter on these prices, actually 123 and 128. So this will be the first channel where we can buy safely and actually prepare for a technical rebound. So let's make it a bit bigger for our convenience. And with this being said, then again the line R1 by that is a very strong attractor, and you can rebound, stay making the profit. And speaking of profit, again, we usually advise taking profit from 10 to 15%, and here it's also the case because this is mainly descending chart, so we need to be careful there and not being too greedy, especially if you're a daily trader. Of course, if you're a mid-term trader, let's say the expected trade channel for you would be here between actually 151 and all the way to 170. So this would be for midterm traders the expected channel of recovery, but if you're a daily trader, just take 10 to 15% profit, re-enter if needed, then you can buy again actually, or check other opportunities. There are many at our channel you can find. So with this being said, this is the first level to enter because it's already third time testing the the support line of 131.36. And usually third time, it's quite weak, so might be breaking down. And then if this is going to happen, as I said, the first channel would be 123, 128 to buy through. What if this channel is broken again? Also possible because it could be a bit deeper decline. We also need to remember that although R1 works as an attractor, but price could go really lower. And therefore, the next level where we could be waiting and buying through be between 108 and 114. So let's write it here again for us as a call out. So it will be 108, 114. This would be the second one to buy, and still this is the technical. So it would mean that we still need to go a bit lower. What would it mean technically? Technically, it would mean that RSI most probably will go in an oversold area below than 30, something that it was similarly happening, you see, in the first arrow when the first time it worked as a strong support. Actually, every time it went really over sold, you can see here that it was then rebounding really strongly. Just to give you an eye guide, let's do it here. So it was happening. It was happening here. It was happening here by end of the year, and also here 2 times. So every time this is the case, every time RSI is quite low, we see a very strong rebounds coming, and this would mean the similar situation if we go to the second channel, and if the first one is not working as immediate attractor activator for R1. And with this being said, we also need to keep in mind that some negative catalyst might come. And what does it mean? It means that it could be a news based on the company, or news based on global market situation, or this sector on the market. So it could be different reasons, let's say different origins, but we need to keep some funds to average down there. And what does it mean? It means that you need to be prepared to buy in the very principal levels, where you can you can be sure that the price will rebound from those. And these are, of course, if you look here, actually the levels. Let's make it a bit safer for us. This is the level between 90, 60 and 96. So actually you can say between 90 and 96. And let's write it therefore. So it will be between 90 and 96. So this would be the third level, and let's make it as a call out. And this is not really that we expect the price to go there. It's not that we say the price goes there. This is where we keep some funds to mitigate the risks. And what does it mean? It means that at our channel, we always optimize for exiting with a profit. So we don't discuss about stop losses, about cut losses or whatsoever. We always want to exit with a profit, or in the worst case with a draw on over the very tiny, let's say, loss, which would be just in the range of the trading tax, that you can get from the market. So that's why we discuss those non-linear averaging downs, and we want to mitigate all possible risks, because once all risks are mitigated, what remains for you is making profit. Therefore, just to give you an explanation, the most expected pattern is the first level, but other two are mitigations. The first one is technical mitigation, the first average down, and the second average down is actually negative catalyst risk mitigation. So with this being said, this is the way to trade with Splunk Incorporated at the moment. Overall, very nice position, preparing for really significant rebounds, but could go a bit lower still. So just keep watching on it and buy smartly. Don't be too fast and also too slow when buying through the channels advised. So with this being said, good luck, and see you at another episodes of Stocks Advisor channel.